Hello there, my friends. Chris Marcus here with you today. I believe it's Wednesday, August 16th. I think it's the 16th. I'm not entirely sure. As you can see, we're outside today. We're doing some loud roof work at home, so figured for today's video we'd give a little tour of the tip of the Rockies here in Golden, as you can see up there, while we talk about quick video about today's Federal Reserve comments, transcripts that came out where basically they said we may or may not raise interest rates, nothing really new there. Although one thing that was mentioned a couple times actually, at least in the Wall Street Journal version of the article that went out, was that there's big concerns about inflation being weak, which kind of is a little bit of a strange concept intuitively when you think about inflation being weak, as if, you know, maybe productivity or growth could be weak, but, you know, the whole idea that the Fed and Wall Street has created that we want inflation and that prices aren't going up fast enough. That's one of the classic Wall Street myths. You can see we're going up the hill here, so Chris is getting a little bit winded, but we'll keep going. I mean, a simple way to think about that one, Peter Schiff had this in one of his books, I always thought was a good example, where if you imagine an island economy and you just have two guys and it takes each guy a whole day to catch his fish. You know, so that's all they can do. But one day, guy A, gets his fish a little bit earlier in the day, spends the rest of the afternoon making a net, and now he can catch 2 or 4 fish per day. So that kind of frees up a lot of other time, and that's what we generally refer to as productivity. Yet, if the island had its own central bank, they would be saying, wait a second, this won't do, we have to raise prices of the fish, somehow find some way to make it more expensive, because, you know, a fish used to be a day's labor. Now, if he can catch the fish, let's say 2 of them, then it's become half a day's labor, freeing up that labor somewhere else. So the Fed thinks that inflation is too weak. And of course, what are they going to do if inflation is weak? Well, that means lower interest rates, more likely to have bond buying. Speaking of bond buying, that was the other part of it. Now it's quite beautiful up here. Perhaps that's somewhere to be mixed in, where Federal Reserve this or that, and then you have nature. So, but as for the bond buying, Fed said again, speculating that might unwind the balance sheet, get rid of some of those bonds that were purchased following the crisis back in 2008, which on one hand would be great, because that would mean that your money would be unprinted, and certainly would be a good thing. Hello, sir. How are you? We got some neighbors here in Golden. So anyway, of course, if you weren't printing money, you know, and they let your translation unwound the balance sheet, that'd be a good thing. Similarly, if I don't get hit by a car here, it would be also lovely. But the problem is that if the Fed really is going to sell all this stuff and is not going to buy any more, you know, who's going to buy it? That's always, you can see the nice little mountain foothills in my background there. That's always been the big question, where, you know, the market would have collapsed back in 2008. Perhaps that really could have been the end of the system as we know it, but money was printed to buy these things, keep interest rates down. Remember that a bond moves inversely to the price moves inversely to the yield of a bond. So if you have people selling bonds, means yield is going to go up, and you have an economy that's based on low interest rates. So, again, encouraging short-term borrowing. So, not even to mention the whole derivative books. And, hey, who are they going to sell these bonds to? I'd sure love to know that. I wonder if there's... Perhaps spread this video, and if we can get me a press pass, ooh, that would be great. Would love to go, love to somehow get invited to those meetings, or maybe I could be the one that could ask Janet Yellen a question, or, not to completely be a smart ass, but, it's like some of these things you wish there was someone would ask, because in the end, basically there's still no explanation of what happens to all the debt. Yield goes up and who's going to buy it. So anyway, today's news from the Federal Reserve. Hope you also enjoyed your tour of gold in here. Thanks for watching, and we will see you again tomorrow.